It is time to check in with Amanda Lang, business anchor with BNN Bloomberg and host of Taking Stock, which you can hear anywhere on the Iheart Radio network. So, Amanda, a couple of data points to begin with today. First off, Canada's unemployment rate jumping to 6.8% in November. That's a level we haven't seen outside of the pandemic.
Yeah, we're going back quite a ways here to get to this level. So a loose labor market is the name of the game. We did see a bit of job creation, but not enough to keep up with still population growth. And the participation rate is down. So overall, it speaks to what will the bank do next week. They have plenty of room to keep loosening here. And now we have more economists saying a 50 basis point cut, so a half of 1 percentage point. And partly that, Aaron, is because they're basically saying between the weakness we've seen in the economy and now in the jobs market, we got to go back to the top end of what the bank would consider a neutral rate, neither stimulating nor withdrawing demand, and that is a full half point cut.
Can you explain what participation rate is in the economy for employment?
Yeah, I mean, it's basically the number of working age people who are either looking for work or want a job. So then we should say the jobs numbers are surveys. They're very inaccurate. They fluctuate wildly. So we report on them because it's data and we like data. It's not the best measure of the market, to be honest. But the participation rate does matter, and Canada's at about 60% right now. So that means between people of working age, and that includes students. So you'd never get to 100% because there's a lot of reasons why people aren't working, of course. But it dropped down a little bit. So that means people have opted out of the workforce for whatever reason, and it can be a variety, but it does usually spell weakness.
When do we get to talk about people just giving up looking for work?
Well, this is really when people there's some kind of intractable unemployment. Now, there are other reasons why you would see, for instance, in young people, we talk a lot about that, the youth unemployment rate, which is extremely high, right? It's been double digits for a little while now. And part of the reason is that because they can afford to. They have other means of support. Mom and dad, sometimes grandparents. They can work, they can be in training, they can be in school. There's a new measure that we're hearing more about, which is not in education or in training. And that's sort of a new category of people that have just really opted out. We don't really know what they're doing. Of course, some people are also sort of doing their own side hustle, and that's harder to capture in this more traditional data.
Yeah, that's interesting, right? I was going to ask that, this idea of a side hustle, and typically it's people who are younger who are doing this and making money and not being employed in, traditional jobs. Do we have a way to measure that?
It's a good question, actually. I'll look into it for future, because I don't know off the top of my head whether StatsCan would consider them self-employed and whether they would self-report as self-employed. I'm going to guess that they would, actually. That would be my best guess, is that they are captured as employed. Okay,
I will point out to one other data point today, this idea that raises, or I guess salaries, have gone up over 4%. And I remember the Bank of Canada talking about that as well. You want to see that, but you don't want to see it go too high, right?
Yeah, and we did see wage growth decelerate. So it's still 4% is pretty healthy, right, relative to the current level of inflation, but it's slowing. So this is one of the slowest growth rates we've seen in months, and that's a good thing. That also means, that helps keep inflation under control. Again, opens the door for the bank to be a little less concerned about inflation, a little more concerned about how strong the economy is, and actually give us more of a neutral rate when they give us a break next week.
Okay, let's move on to talk about the big Canadian banks reporting earnings this week. Some pretty good numbers for some of the bigger players like RBC, like CIBC. But TD Bank, I actually saw one portfolio manager saying, using the words steer clear of TD Bank as an investment. So typically Canadian banks are a good investment. Why is TD an issue here?
TD, of course, has been caught up in money laundering in the U.S. It's U.S. bank in a big, big way, and this year had to agree to what's called a consent order, so to settle those charges with U.S. authorities, including the SEC. They've actually limited their growth in the U.S., so it's a big deal. They've paid $3.5 billion or something in fines, but more important is the agreement they've made to limit the rate at which they'll grow parts of that U.S. business. So what TD actually said this quarter is they are not going to give forecasts on their future growth. So normally the banks give, and the other banks, Scotia is a good example, where their profit rose, but they missed expectations slightly. It does matter, right, what the street thinks you're going to do. And TD is saying we're not going to tell you for the foreseeable future because they don't know how this is all going to play out. And that, for a lot of analysts, that makes it a bit of a no-fly zone.
Sure, uncertainty, not something they like to see. I would just bring up one other point. So BMO, if I got this right, didn't impress the street because of what they call loan loss provisions, right? Which is money they set aside thinking in case things are going to go badly and we're going to get paid back. I thought that was a good thing. Why would it be a bad thing that they put aside more than they actually had to deal with?
So the other banks are right at the stage of the cycle where they're lowering their loan loss provision. So Scotiabank, CIBC, they dropped the amount they're setting aside. That kind of falls right to the bottom line because it's kind of a notional kitty that you keep back in case some of your loans go sour. RBC and BMO actually both had higher loan loss provisions. It signals that they worry about their own portfolios, right? That they have debt out there that they're not sure will be paid. We won't take it too seriously. They're not at hugely high numbers, but it would be a better sign for the economy if they were all lowering, if they were all thinking, the worst is behind us. So the fact that a couple of them are still raising their loan loss provisions means they're a little bit shaky about 2025.
Yeah, which makes me wonder, as you said that, is the worst behind us? I mean, generally in the economy, can we say that or not?
It's hard to say. I have to say, I mean, you probably saw Stephen Poloz, former Bank of Governor Canada, this week saying, we forget all of this kind of vibe session talk. We're in a recession. And that's because when you do the per capita read of our growth, It's been negative, of course, for 18 months. So that's why it does feel like things are slow. That's why the job market's soft. The question about what happens next year, there's some wild cards, right? I mean, we can't really factor in what happens with the Trump presidency because we don't know, will there be tariffs? Will there be tough negotiations? What's going to happen with China and the U.S.? That'll impact us hugely too. So overall, our economy is doing okay. It's, and I don't know if you saw this. I was laughing because this is why people hate economists, but StatsCan just revised all of their growth numbers for the last 3 years about a month ago. So it turns out we didn't do as badly in pandemic as we thought, which is funny. But so Canada's doing okay. It's not gangbusters. It's not terrible. We don't have any reason to really run and hide just yet, but there's so much uncertainty about that U.S.
All right. Last thing I want to touch on, even for people who aren't involved, you see the headlines that you can't avoid them. Bitcoin topping $100,000 this week. There are still plenty of people who don't understand how that works. At $100,000, maybe some people look at it and go, well, maybe it is time for me to get involved. So what's your take on that?
I mean, my real take on that is whatever you think about Bitcoin, it shouldn't be your primary investment. So for a long time, we put gold in this category where you could, own gold if you like. It's a hard asset. It should never be more than 5% of your portfolio. And that's not me talking. I don't give investment advice, but that's been kind of standard financial advice for years and years. I would say or suggest that Bitcoin should go in that same category. If you're interested, if you think it's fun, go for it, but don't let it dominate. And here's why. There's no intrinsic value to this thing. There's no way to measure its worth. The only value it has is that some guy will pay more for it later. That is not a good, don't take my word for it. Take Warren Buffett's word for it. He just talked about this. Yes, it's gone up in value, but if that's the only argument for buying it, that's a scary one because you know what can happen? It can go down and there's no bottom.
Keep that in mind. Amanda Lang, thank you so much.
Always good to talk.